Okay, welcome back, guys. Another trade recap. Just want to go through. I'm kind of gonna do like a two in one, just to keep it quick. This was this yesterday or was this 2 days ago? Yeah, this is actually yesterday. Yesterday morning, looked for long positions. Unfortunately, got stopped out. Um, and then yeah, I kind of just want to talk through like some analysis and some stuff that I saw within the market. Um, a way more optimal entry that I found. And yeah, just got stopped out. Simple, we swept out high time frame liquidity, market open, and then almost didn't quite get a break of structure up here. Prematurely entered, but the difference would have been me entering right here. So yeah, whatever. Entered right there, got stopped out. I want to kind of go through and talk about, after I did some of my analysis, what would have been the more ideal trade and how I could have um, capitalized more, I guess. So, mark these out, these out, and this out. Um, just because I think it's important to know. So, this was 2 days ago. Big sell off, right back down to all these draws on liquidity that are down here, 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 uh, fair value gaps all the way. You can see we have fair value gaps right here. Filled those in right to a T. I kind of want to talk about uh, an entry that would have been better that I was thinking of doing, but I'm not gonna lie, I got a little bit scared of the price action. So yeah, so I want to talk about order blocks, and why those are such a nice confluence to have and just to know. So order blocks are the leg down or the series of black candles down before we get a break of structure to the upside. Now, if you remember, this candle is blue. It's an up candle. This candle is black. It's a down candle, right? And so up, then down. Uh, Just remember that this one is black. This one makes a new high. Then when we get a candle move above here that closes above this high right here, that is considered a break of structure. We have a break of structure to the upside. Let me fix my camera a little bit. There we go. So, right, we have all of these. We have this break of structure. So imagine it the same exact way right here. You can see that we get a break of structure to the upside. I think right here would be considered the break of structure, just because this is a wick. It's not a full candle close. This is what we're looking for. That's exactly what we get. So the order block is going to be this series of black candles right here. That price is able to fill orders at. We swept out liquidity. We filled orders. Yada yada yada. Let's look. Right, so we swept out all this hourly liquidity, and then we started rallying to the upside. Right. Well, the thing about order blocks is they're often used as a retracement tool, right? Just like our equilibrium, just like for value gaps, they're going to be good retracement tools that tell us what to do, and you know, yeah, you can enter at the top of order blocks, set your stop loss at the bottom of the order block, or liquidity below, whatever you want. This more so would have been like a swing trade, but so my original entry for the trade, I believe I marked it out. If I didn't, uh, I don't quite remember. I think it was, and I also did trade a little bit. I kind of got in after my um, ideal time, but it's okay. Still got stopped out right there. So the interesting about this setup was that we tapped right into an order block, and we also reached equilibrium. We got right to equilibrium, right to If you know this 0.618, super important number that I always just keep in the back of my mind. That's our Fibonacci number. That's our the golden ratio. Um, if you don't know what I'm talking about, do some research, look it up. Super interesting stuff. But we tapped right into here, right into an order block, right into equilibrium, and rallied right to the upside, right to high time frame liquidity. More optimal trade would have been limit buy orders here at our 0.5 at our equilibrium, and then limit buy orders here. So we would have been entered into our trade here, right, off of this, right, and then as far as stops, man, this would have been a hard stop loss to have, and this would have been quite risky. But my first take profit would have been here, and this is definitely more of a swing trade. Offers a 1.5 risk to reward. That would have been hit. Hourly drawn liquidity. Hourly drawn liquidity. And runner in would not have been hit. But it's okay. That's why it's a runner. Because then we'd be back down here. Anyway, I think that would have been a way more optimal entry. I just would have hate to be on the downside of it. So definitely limited contract size, whatever the case is. And yeah, it's very interesting to see what's going to happen with the S&P, because if you can't tell, and this kind of goes back to my point that I made earlier when I just removed drawings. Pause the video. Look for the break of structure to the downside in this example. Okay. It's this right here. We have a high then a low then a high. The lower wick out of those two is going to be our break of structure. What did we get 2 days ago? We got a break of structure to the downside. So I'm very interested to see, if we were just coming back in, and we can even see the same exact thing from the other from the other way. Is like if we're looking for order blocks here, we're looking for the leg up that caused the sweep on liquidity. So ideally, like a really good order block is going to be something like this. Right. These are the legs up that caused the sweep on liquidity. Price goes to the downside, comes back up, fills in orders, goes back down, yada, yada, yada. Then we don't get another tap into that. Now, if we even look closer, so we have hourly liquidity up here, right? So these are the, and I honestly I'm not a big fan of using like hourly order blocks. You can, but it's just very hard to get like a precise setup or something nicer. So I like 15, 30-minute order blocks. If we look, we sweep out this liquidity with this leg right here. I know it's supposed to be a leg up, but still, just to kind of like get a point across. Where's price come back to? Right to an order block. And guess what we do? Come back once, boom. Come back twice, boom. I say that if we go back in one more time, I'm going to load up on limit sell orders that are just stacked up here. Maybe even one at the top of this liquidity. It's just very hard. It's very scary right now because of the upcoming election. So it's going to be interesting to see what price does. But, on the daily, we made, new highs, lows, new high, and yada, yada, yada. And boom, we just broke structure all the way to the downside. Come back up. I think the next move, obviously this move right here, is kind of like that new leg down. But I think we could probably come up to here, come up to this fair value gap, and just absolutely rip to the downside, fill in some imbalances. That is my analysis. That's what I think for honestly like the next few days or maybe even weeks. We're looking for a trend continuation with the break instruction now to this downside. We filled in this fair value gap, took out this low time frame liquidity. So, really next important levels to look at. We have a wide range of order blocks all in here. We have order blocks all over the place in here. Let me just mark one out real quick. So, I believe you're going to be high time frame liquidity, if I'm not mistaken. Low then high. Thank you. We're going to go on to our 15-minute, and we're going to see that it is the leg down. So, and I like to go wick to wick, pretty much. You could see it all through here. You can see it all through here. This is a very big order block. So we could be looking for levels down, for price action to move down all the way to 57.50. That is just it's a very rough prediction. 57.50. We could see, that we have a lot of orders down here, a lot of liquidity down here, so 57.25 is completely possible. But yeah, we don't have many fair value gaps here, and honestly, the next imbalances that we're looking for in the market are down in this range. I don't think that we could get down to here in the next few weeks or even days, or heck, it would probably take like a month to get down to here. So, and even if we don't, we have plenty of fair value gaps that don't ever get filled in the market. If we look after 2022, or I guess, yeah, end of 2023, big explosive movement to the upside, and we never fill in these fair value gaps. It's just explosive. We more recently have, but could we be topping out? Could we be reaching our limit? Who knows? It's hard to tell. Yeah, that's it for the episode today. For the video today. Um, more optimal entry would have been down in this zone. I'm gonna next time I do some kind of analysis, I'd love to do it live and just show like what levels I would place my orders at. That's definitely something that I would like to do. And also, I will be uploading some new videos soon for a portfolio that I'm managing. I made it with not my own capital, however, a friend of mine looking to start his investing journey and reaping the benefits of being an investor. So, yeah, that's it for the episode, guys. Thank you for watching. Comment if you want to see anything specific or would like me to show. And yeah, that's going to be it. Peace.